Welcome to She Means Profit. And if you have been following this video series, we are on video number 4 right now, where we will be talking about creating a financial plan for your business. So we are in step number 3 of the Cash Confident framework. This is my most favorite step of the framework because this step is where I really see a transformation when I'm working with business owners. So you need to create a financial plan for your business. If you have goals for your business, financial goals that you want to meet, you need to create a plan and map it out. A goal without a plan is just a wish. So it's really important to get those financial goals down on paper. And well, in our case, we use Excel, but same meaning, get those goals solidified by creating that actionable plan so you know what steps you need to take to reach your goals. The financial plan maps out where you are now in your business and where you would like your business to go to in the next year. I'm Melissa Houston, and I am a CPA, a business finance coach, and the founder of She Means Profit. So She Means Profit is the podcast, blog, and now our new YouTube channel, which I'm very, very proud of. I am a columnist at Forbes.com, and I write for other large publications as well. I have a book, Cash Confident, due out in May of 2023. And I help successful business owners increase their profit margins without having to increase sales so that they keep more profit in their pocket and ultimately increase their personal net worth. So I've created She Means Profit to help business owners create the most profitable business possible. So if you like what you see, I invite you to hit like and subscribe to the channel so that you can get notified every time we drop a new video. To video number 4 in our 6 video series, where we are talking about creating profitable businesses. So this 6 series is based on the 5-step Cash Confident framework. And if you haven't downloaded the free download of the 5-step roadmap to a profitable biz, I invite you to do so now. The link is down in the show notes, and you can get that guide for free. So let's dive into creating a business financial plan for your business. So whether you're a small business or a large business, I am a firm believer that you need to create these financial plans to give direction in your business. If you have goals that you want to reach, it's great to put them down so you can see how your business is doing. So your business financial plan is based off of your income statement, which if you'd seen the previous video, which we will have links to in the show notes if you missed it, we'll link back to all the episodes. But your income statement is something that you really need to be familiar with in your business. One of the top ways to make your business most profitable is through good money management. You would be amazed at how many benefits come with having a good money management system in place. And by benefits, I mean profit. So quite often the argument I hear from people is, well, I don't want to hire you because you're not going to help me generate revenue. No, I'm not going to help you generate revenue. Well, in a sense, I do help you generate revenue, but I focus on the profit. And you can generate as much revenue as you'd like, but if you're not making profit in your business, that's a red flag. So we create profit, and profit is what you get to keep at the end of the day to either reinvest into your business or to pay yourself out as a business owner. So understanding how your business works as your financial asset, it not only helps you produce income, but it is increasing value in your portfolio as well, because you are typically 100% owner of your business. So quite often businesses don't manage their money well because they either don't know how to create a system for it or they're afraid to use it. And I get it. And if you don't have a lot of experience with financial data, I can see how the numbers can be very intimidating. But the strategies I teach will help you grow your business. So yes, you will grow your revenue, but you will grow your profit. Your financial data is also known as your business numbers, and your business numbers are telling you a story, right? So they're giving you valuable feedback, telling you how your business is performing. So you want to make sure that you understand that data. I have seen for myself business owners who put bank statements and receipts and take it to their bookkeeper periodically, usually once a year, and get their books updated and have them create the tax return. And this is not an efficient system for your business, right? I can't tell you how many opportunities there are and how much money you're leaving on the table if you're not looking at your financial statements. Your books and your records shouldn't be there just to get your tax return completed. That financial data is loaded with information that will tell you how to make smart business decisions and how to increase the profitability in your business. Every CEO has a good understanding, needs to have a good understanding of their financial information. In larger companies, the CEO is the boss, but the CFO is the right-hand person to the CEO. And the CEO relies heavily on that CFO. Now, as a small business owner, you likely don't have the luxury of having your own CFO. So you need to understand these numbers on your own. You don't need to be an accountant. You don't need to be, years of education to be a CFO. You just need to know what you need to know to look at your financials and understand what's going on. And this is what I'm here to do, is help you learn this. I always say that nobody will ever care about your money as much as you do, or your business. So never give your financial power away. So even if you do have the luxury of working with CFOs and tax accountants and bookkeepers and stuff like that, don't hand over your trust 100%. Right? You need to be looking at what's going on in your finances, looking at your bank balances, looking at what's the activity that's going on in your business, and really understand your numbers so that you can make profitable decisions. Big step in making a profitable business is creating that financial plan for your business. So what you need to do when you're creating this plan is you need to start out by looking at your income statement. Figure out where your business is at today. And what you're going to do is break it down month by month, 12 months out, and plan. Are you planning for growth, or are you planning for things to stay as they are? Are you wanting to just keep your sales the same, but increase your net profit margin? Really understand what your goals are. And for this example, we're going to think that you are trying to increase your revenue goals. So what you're going to do is you're going to look at what's going on in your business today. You map out what the last month or the current month is for your income statement. You've got all the revenue coming in, less all your expenses going out. And then you map out the following month and the following month for 12 months. You want to keep that going. And if you're increasing your revenue, you can increase it 10% month by month by month, whatever it is that you think is achievable. So if right now you're a 6-figure business and you want to get to, like, let's say you're pulling in 100,000 and you want to get to 500,000 of revenue by the end of the year, you need to increase incrementally that revenue coming in each and every month so that you hit your $500,000 target by the end of the year. So sometimes you have to massage the numbers and really, think out logistically what's going on in your business and what the cycles of sales are. That's another thing that you have to keep into consideration. Like, for example, if you're a product-based business, then, chances are November and December are high sales level months for you, or special events like, let's say, Valentine's Day in February, and your sales increase then, and then maybe Easter, what have you, whatever's going on, you need to know your business. You need to look at the trends, understand where your sales would uptick in your cycle, your 12-month cycle, and where they would be quieter, and plan accordingly. It's great to use last year's data to project this year's numbers, right? So you want to make sure that you're breaking it out every month for 12 months, plan out your revenue increase, and plan out your expense increase, because if your revenue numbers are increasing, so are your expenses. And then what's really important when you're doing your financial plan is making sure that your net profit margin either stays the same as your business grows or it increases. If your net profit margin is decreasing as you're growing your business, that is a bad sign, because your net profit margin is telling you that how easy it is for your business to make profit. So let's use an example of where you are at currently. If you're at 30% net profit margin, you want to make sure that net profit margin from now to 12 months from now stays at 30% all the way through, or it increases like 35, 40, whatever. But if it goes down to 25% or even 29%, that means that you are working harder for profit. So essentially you're losing money. So you want to make sure that when you're growing your business, you're not only growing your revenue numbers, but it's really important to keep your net profit margin tight. Because what that means is, for, let's say you're at $100,000 and you have $30,000 worth of profit, when you get to that $1 million mark, you should have $300,000 or $300,000 profit if you kept that net profit margin consistent, right? So if you're losing money, then you would have less than 300,000. But this is where people get confused, right? So if you are growing your business and you're like, wow, I've made $1 million this year and my profit increased to 200,000. So this is great. I made $30,000 of profit last year, and now I've made $200,000 of profit. Yeah, it could look like it's going really, really well. But when you look at your net profit margin, you see that last year you were at 30% net profit margin. This year, making $200,000 out of $1 million of sales for profit brought your profit margin down to 20%. So that is a bad sign, because that means you're working harder to create profit in your business. You should have been making $300,000 or more in profit. Keep it at 30% profit margin. So it's really important to understand this. And once you get it, it's really easy, and you understand how important net profit margins are over profit. So revenue is important, but without revenue, you can't have profit. And profit is ultimately the most important thing, because profit is what keeps you in business. Profit you can reinvest into your business and grow your business, or you can pay yourself out. There's a lot you can do with profit. You can pay yourself out and increase your net worth, or keep it in the business and increase your net worth, because when you own your business, you own 100% of your business, and that increases your worth. So I hope you've taken value from this lesson and you understand that you need to create a financial plan for your business. And if you want to grow your business, it's important to keep your net profit margins consistent. If you like what you're watching, make sure that you hit subscribe, like the video, share it with your friends, tell your business friends that, you know, that She Means Profit is out there, and for them to come and join us and learn about how to make your business profitable. I will see you in the next video.